Hi friends, Rocky Outcrop here, doing a little bit of an unusual episode because I'm talking about traditional stocks, but I hope you like it. The markets have just closed in the US of wonderful A, and we're going to take a look at how things managed to close out. Thanks so much for joining me for this. Be sure to hit that like button if you like any of this context. I'm looking at the GME chart right here. We're going to be taking a look at AMC, Nokia, Blackberry, maybe some silver, maybe a little bit of crypto, just to give you a sprinkle of that in this market close summary episode. Thanks so much for joining me. Like I say, and this is GME, the 24-hour chart up here, and I'm a little bit disappointed that the prices weren't able to make it all the way back up to the 236 Fibonacci retracement point here. Where is this Fibonacci retracement point drawn in from? Well, it's actually from the market cycle low down there at $2.50-ish, up towards the highs up here at near enough $500, and then the 236 is actually coming in here at $141. Is it a bit rich of me to be disappointed that we didn't make it there? It certainly absolutely is. Dropping back down towards a low time frame, we can see that overall today the markets have really just been kind of moving towards the downside, somewhat consolidating in its factor around here, not having managed to actually come down as far as this yellow serrated line here, which is the key support and resistance zone for us. Not only is it the last inflection in the market on GMEs over here from the 25th of January 21, but if I actually was to be obliged by TradingView loading up the screen on time for me, yeah, there we go, then I could scroll over to the left here eventually and show you how this is a significant area for previous highs in the markets. Well, whatever, take my word for it, it'd be better on the 24-hour time frame. But zooming back up to where we are right now, how did things close off for the day? Do we have anything particularly of note jumping out at us to give us something to be aware of? Well, let's just face facts. 4-hour time frame, previous lows coming in here or wherever. You choose where the previous low was. Bringing up the MACD, what's that then? Well, any turnaround from this point would be absolutely stinking, very, very stinky. You know that scene in the Jurassic Park whenever they go up to the big mound of poo? That's what I'm talking about, stinky, in terms of the hidden bullish divergence on here. Hidden away from all those pesky hedge fund managers and visible to all of us in the retail world. Well, let's hope so. In terms of the DMI, how did they do with their rectifying their underwater positions? Have they managed to actually capitulate the markets and go for a trend towards the downside? Well, the 4-hour time frame coming in here showing us that they didn't actually manage to achieve that 24-hour time frame. Of course, we do have a crossover here, something to be worried about. That's how they did actually manage to achieve, in terms of their sideways consolidation, they managed to avoid this crossing back over the way. There is a degree of course, trepidation in the markets at this point, but it could absolutely go either way. Managing your risk with stops and all the rest of it makes this rather easy. You're able to stop out probably in profit, and perhaps at the worst a small loss, whereas those hedge funds, they ain't able to stop out anytime soon. Let's hope that they get absolutely driven to the wall. Jumping back down towards the 4-hour time frame on this one, we can see that it did drop off down the way here, putting in a low here again, coming in lower than our previous lows, giving us hidden bullish divergence on the RSI. We're below the neutral line. There's a chance that we could move up towards the top side. If we did, then what would that look like? Well, actually looking back the way, it would be great to see, because we actually got our highs on there without bearish divergence. Likewise on the DMI, everything was rather glorious, and in fact, if things had kept going simply from a technical perspective, they were due a pullback anyway. Regardless of the maleficent intentions of the hedge funds, we were due this movement anyway. Big movement up equals big movement down. We have broke past the 236, but I wouldn't get too worried quite yet. Over here on the no sure thing indicator, let me drag it back down. This does take quite a while. We have seen a cross over there. Now that is our biggest worry as well, but another cross towards the top side, who knows, things could get VW crazy on the go over here. With regards to the stochastics though, you're seeing that we were already in this mode from before, and so far we've come back down to the oversold territory, ripe and ready for a crossover, certainly offering up a decent enough position for us should we want to get in. Movements up towards the top side though, I would say, you know, we would have to look at how the market participants allow us to operate with their pre-market trading with regards to this one, and would we actually get an opportunity to get in on a jump on this or not. I'll put that into context by going over here and checking out silver real quick before checking out the closes on Nokia and AMC and Blackberry. As we can see here, there was a gap as I marked out on the silver charts. We came back down in the period when we actually broke through and created this gap and formed this wick here on the a couple of days ago, and this is what's drawn in to show us where the gap is, and in fact that lines up perfectly with the 236 over here. What did we see happen with the price action? Well, actually dropped down and came right over here to the gap itself, where trading actually opened on this one, and the prices then moved on further down, taking out the 382, as you know was the inevitability almost at the point when we skipped past this gap, coming down here towards the 50%. We didn't actually take that out yet. Looking for recovery on this one. Could we get it? Is this a decent buying opportunity? It may well be. I was kind of warning people of the need for a pullback on this episode this channel a couple of days ago. We've subsequently seen a nice and tasty 12 to 13%, 13% pullback in the prices, 12% pullback. Very, very good. That's what we needed to see happening. Now we have the opportunity to go towards the top side. Again, bear in mind the dynamics which will exist in it around this gap. I would like to see this go through the trading day, operating within this, and then continue towards the top side. That's my current prediction on this one. However, I would be cautious again to remind people of the story that we're just talking about there with GME, showing you the example here how the trading, thanks to the dynamics of the completely and absolutely trustworthy regulated markets, allows for these gaps, of course, to move like that correspondingly when the markets are closed and you may not be able to trade them yourself as a retail trader. Moving on then, what we wanted to look at, and keeping the theme of gaps alive, let's jump on over towards Blackberry and stick it in. Wait, I'll just stick in the ticker as well, because BB, just for anybody that wants to know it. Looking at the NYSE on this one, of course, as well. And there was some gap chat here. Where's my gaps? Okay, we had a gap over here and that got filled in. We talked about that on the daily time frame, and we were concerned about the potential for us to go down as far as other areas. This one here, what? Yeah, this one over here was already obviously filled in the immediate aftermath of it being created. We were really concerned about gaps which were showing up on the 15-minute time frame, and we did actually come down as far as we came down right to the edge of the gap, but we didn't actually go on and fill it. Again, quick reminder to people, always be aware of the market dynamics in and around gaps as well, as opposed to the gaps themselves necessarily. And then what we're looking to again is towards top side. Now we have another gap in here where I just put in that marker. It's not just a gap, it's also a point of support and resistance from the past, and where we had the other significant daily time frame gap. That's our next target towards the top side. That's at $14. We're at $11 at the minute. Significant profits to be made on this one. Is there a decent chance for this to continue up the way and give us that movement? Well, let's just look at the DMI, and it certainly shows us that we do have that potential right now. Of course, the ADX itself, this line, towards that's coming down towards the lower side, that's the strength of trend, showing us we don't really have a strength of trend on the 4-hour time frame. 24, was that the 15-minute time frame? 24-hour time frame, sorry, conversely showing us that that's still very much the case. It's still in place. We're down below the 30 area on this one. Something to be aware of for you, but of course I do anticipate at the minute for the trend to continue being our friend. Of course, this is the crux of things, and as you can see, we've got Rick and Morty lips on the DMI over here. I suppose people don't necessarily know what I mean by Rick and Morty lips, but if you ever watch Rick and Morty, you probably think that's the case. Well, this is something that we talk about in the channel quite a lot. This is what we might see just before, of course, things continue to fly towards the top side. It's like a failed kiss, if you like. What Morty would do, I suppose, if he ever got the chance with Jessica. Shout out to everybody who likes Rick and Morty. Give me a like if that's one of you. Jumping on over, let's just take a quick look and see how Nokia Corporation actually managed to close out its chart. Oh, sorry, like I say, you can of course look up things if you're from the crypto world and you're wondering how to look up stocks just by typing in the name of the stock itself. But of course as well, you can look up Nokia, for instance, by looking at the ticker NOK, for example, on that one. Zooming on in, we can see craziness happened here. Big old gap towards the top side. We've got to be wary as well with regards to the dynamics, which will come into play in and around about that 550 to 565 zone for us. We've got the low coming in here. Again, the dynamic, talking about gaps, we didn't actually fill this gap in coming in for it. We came close, came down, we didn't actually fill it in. A wick going into a gap does not constitute it being filled, I'm afraid, although, you know, we would have been nice to have seen it go down a little bit more for us to give us that confidence in terms of of, you know, having covered off what we need to in the meantime, but there's kind of always, not always, but frequently another gap on the charts waiting to be filled in. Is this one here, does that count? That is just a slight sliver of a gap over there as well. But anyway, you know, we don't need to put all of our money on gap plays alone. There's plenty of other things to be looked at. What we have right now, again, is quite clearly that we're below the 236, but have we done enough with regards to the Fibonacci retracement on this one? Just to draw in the context again for anybody who is looking, well, yeah, it's a similar situation to what we saw with the movements down past the 236 on GME over there, in the sense that we came down below it and then kind of, you know, we're gapping afterwards. Got to be careful with these market dynamics. Came down towards the 50%. That obviously offered up resistance, operating in around here at the golden pocket. We've not managed to break past the 618 quite yet. I'd say we're still on the way potentially to fill in this gap. You know, if we were to do that, then crawl up towards the top side. Looking again for the key areas. Movements past this zone, just in terms of how we open up trading tomorrow, could be quite good. Looking for momentum plays at that point up towards this price point of $5.37. Of course, if we capitulate just a little bit in the opening hours of the morning, then I'm looking to try and find entries in at around about 423, then to carry that on up towards that $5.59 territory where our previous high was. From that point on, I'd probably leave 25% of the goodness on the table to carry it on up towards the future. Of course, if you want to just go all in on things, then by all means, I'm not a financial advisor. I'm not going to tell you how to trade ever, but that would be one of these things that you could be looking to for the next play up the way that comes in at $6.33 for us. And all of this is operating within the realms of normal territory. How did the close go for today on Nokia though? Definitely went very, very well. That enthusiasm taking us back up to that key area of 474, not pushing past it, leaving almost a little bit, you know, on the table for us to figure out tomorrow, making it so that there's that little dynamics. It'll be interesting to see how the markets actually open up with this one and their pre-market plays, of course, as well. Looking for momentum in either direction with this one. Really starting off here by saying that as well with regards to Nokia, that yesterday's candle there was, of course, that's the 4-hour candle. The previous 4-hour candle before the close was a doji and came in here with finding out our support at the body of that doji, taking out the wick of this candle here. If we do start trading that way tomorrow, then of course I would be looking down towards these areas. If you wanted to play it safe, you could wait again and manage your risk right at this point of $4.39. Take a nice trade down to 424 if you're just looking to scalp on that one again as well. Movements down past that line, things change fairly significantly, but really where we have that other gap, that's where our last low was. We don't have a clear gap for us in this we have a big clear gap, sure, and we've not managed to fill that in yet. Sure, that's the case. Looking to see if that actually happens, because this would constitute a nice higher low for us, a nice higher low. That isn't really very legible, but that's what that would constitute for us, a nice higher low in here if we were to achieve it. Of course, if we don't achieve that, then the next area for a higher low comes in at around about where we had our previous question mark gap at. So when you're talking about changing any market structure, none of this has changed. It still remains in a very much bullish overall broader term bullish stance. Now I'm going to have to look up towards those things like the 24-hour time frame, etc., and show you this overall trend for you to understand that this was a low, this was a high, this was a low, this was a high, and until such times as we've actually set in a higher low yet, we've not done so. But it would, when it happens, it'll be a higher low, unless of course we really come into this territory over here. What is that territory? Well, it's the territory between the 786 and the 100% retrace. On this one, I don't want to see a 786. Okay, then moving on the way, what was the other one we had to look at? AMC. How are all your cinemas getting on in the world? And again as well, we have these dynamics with the market dynamics on the go, putting attention onto gaps for us. Now, various different horizontals to be aware of as well with regards to this one, quite clearly in there. Then towards the top side, that'll do for just one, and then I'll give it one towards the downside, and that's going to have to be, of course, where that gap exists currently for us, and this is what we're going to have to look at. But how did it close out for the day? We did just close. Let's take a look and see how it did. Well, we have everything going along and the no sure thing saying don't worry. So right, so you have a lack of bullish divergence. Let me just be clear on this one. you have a lack of bullish divergence because this point here was not actually a higher high. You have this high, then you've got this flux in between. This was an equal low here between these two lows. This was a high, this was just flux, and then between this high and the actual high, it's not bearishly divergent. So you're not looking for bearish divergence on the play on this one at the minute. We've had a natural decent retrace back down clearly towards an area of support and resistance. We're sat there with a gap up above us. Taking that gap out does two things at once. Of course, capturing that upper side support and clear zone for us to be aware of. Just looking back even more to get confirmation on that for me. Yeah, absolutely. Taking that out is going to be a significant thing for us, and things would become very much that over enthusiastic, lower value, higher risk mode there for everybody to get involved in, for that touch of that FOMO. Drawn in the Fibonacci retracement on this one because we might give everything the same treatment. Like I say, this was a double low here for us. I've not drawn that in perfectly accurately, but you can see the 236 lines up perfectly with that. Of course, suddenly invalidating that Fibonacci retracement. Where do we see with this lining up? The 618 line up with the bottom end of that area. Massive degrees of technical analysis here. Technical analysis is definitely your way forward. This one, of course, people will be talking about things like this going mad on Wall Street bets, but if you're looking for decent entries and exits, then these three lines really operate up for you the best ones, indeed the ones that the guys on Wall Street bets themselves will be looking to, believe you me, themselves, and how they're going to manage their own risk, while of course they might call you a little bit smooth in the old brain for having not just bought in at any price anytime. Don't be stupid, get on with the show. So there's more dynamics here. We're looking at TA, and I think it does definitely work for us. Things are looking pretty good, and the no sure thing here telling us as well that the trend is still very much in place. Just to run back through those, by the way, over the last wee while, in terms of the 24-hour time frame, how have the other ones been looking that we were talking about in today's show? Again, no sure thing showing us it's towards the top side. Well, we have these intermediate oscillators just kind of resetting slightly. Yes, we had bearish divergence on the I suppose on the stochastics, but bearish divergence in stochastics is about as useful as a fourth wheel in a Reliant Robin. That's a really bad actually analogy, that one. Not very good essentially for us is the summary. And then of course we've still got the strength of trend in place. Yes, pulling back on it, certainly room towards the top side. If we're going to go crazy on any of these, then you'd want to see the DM positive breaching that 50 line, and it hasn't done it over here on the old Nokia like it has on others. Had it done it on AMC there? Yeah, like it did on AMC. So we haven't got that blow off top that people would be talking about, for instance, over there on Nokia yet. Certainly a lot of value towards the top side, talking numerous percentage points. Looking at BlackBerry again, for instance, as well. How did it look? And you can see the no sure thing is still looking okay, and of course we've got this overall upward trend possibility. I like the fact that we've got a green day for us at the minute here. It does make it look like it's a higher low, and of course we don't really have hidden bullish divergence here on that one on this, but we do we have it here? Well, we have it here on the MACD. Look at that, wonderful. Any movements towards the top side coming with some more of that Jurassic Park Triceratops poo pile stuff on the go for us. So, and finally, again, going back the way, what was it, GME? Oh, I'll take a look at silver as well. GME, very much, again, no sure thing, telling us that the trend is still very much on. Eat that, hedge funds. And then SLV, how are you looking over here? And well, there is a bit more of a different question on the go with this one. We've at least asked the question here, but we can see it's a positive cross again. So there was this negative cross in here on the charts, and that lines up over here with this drop. This rise in price action and then subsequent drop down has left us in a position where we've actually just seen the no sure thing turn around. What is that? Well, that's just essentially a series of moving averages. I mean, you can see the same sorts of things here if I bring on the whole host of moving averages that we like to use on a regular basis, for instance, and you can see the same sort of chat over here. This is all spanned out nicely, came back down, big load of crosses crossing over, crossed back over towards the top side just now, finding support in here at the low small term. What's that, the 8 period? Do I have it on as well here? Just double check here for sanity check. Yeah, the 8 period exponential moving average coming in here, and again just showing us the way everything spanned out. Look at that as well. It's got the full on salad fingers approach. By the way, drop me a like in the show if you've ever heard of salad fingers. If you haven't, go ahead and look it up on the YouTube. I'm actually a friend of the guy that made it through social media back in the day on my sort of personal social media feed. He won't know that I'm doing this. I don't talk to him on a regular basis. Anyway, you see all that fanned out really nicely towards the top side in the rusty spoon format. So excellent. That's us kind of run through everything. We can go back over to shit talking on the GME screen, unless anybody wants me to talk about anything else. By the way, have I missed anything off of my thumbnail? Wouldn't like to have missed anything off my thumbnail. I think I just ran through the ones. Can someone just verify me that I've not missed anything on my thumbnail there? So great. Okay, that was a bit mental, wasn't it? Oh, by the way, if you got any value from that at all, I'd massively appreciate a like. Again, if you want to subscribe and come back and see these videos in the future, I do live streams quite a lot, then you're more than welcome to. I love interacting with people and of course answering questions that people have with TA. And I really did go the extra mile in yesterday's video when I put in comments. I told somebody precisely how to trade as well. I basically give somebody a trading 101 lesson in the comments of yesterday's videos on the YouTube. Let me give everybody a quick shout out that's joining us here, by the way, because I really want to have everybody feel included in the show. I'm not just talking it into open space. I've already said hi to the likes of K-Doc, John and Tony Wright, but never going to put it never going to reject an opportunity to say hi to you friendly people all over again. Tradespot, hi, nice to see you here as well. Marcin, hi, good to have you. Let's see who else has been chatting away. Space